Ladies and gentlemen, Asian guy here, stop what you're doing. Turn off the financial news. Because everything they're telling you about today's market sell-off is a lie. They want you to think this is just another geopolitical spat. They want you to believe this is temporary volatility that will blow over by next week. They are wrong. What happened in the markets today wasn't a sell-off. It was a coordinated strike. And the target wasn't just American portfolios. The target was the entire foundation of dollar hegemony. The Dow dropped 847 points. The S&P fell 2.8%. But those numbers don't tell the real story. The real story is hidden in the cross-currency flows. The real story is buried in the bond market movements that nobody is talking about. While you were watching the equity carnage, something far more dangerous was happening in the shadows. The Chinese were systematically unwinding their exposure to American financial assets. Not slowly, not quietly, violently. We're not talking about a few billion here and there. We're talking about a coordinated liquidation event that started at 3 a.m. Eastern when Shanghai opened. By the time New York woke up, the damage was already done. The futures were already bleeding. The dollar was already weakening. And the Federal Reserve was already scrambling to contain what they knew was coming. But let's start with what you can see. The surface-level chaos that made the headlines. At 9:30 a.m., the opening bell rang. And immediately, something was wrong. The usual buyers weren't there. The pension funds that normally step in during any dip stayed on the sidelines. The sovereign wealth funds that usually provide liquidity were nowhere to be found. Instead, we saw wave after wave of systematic selling pressure that looked almost algorithmic in its precision. Technology stocks got annihilated. Apple dropped 4.2%. Microsoft fell 3.8%. But here's what's interesting. These weren't panic sells from retail investors. These weren't even institutional rebalancing trades. The order flow data shows something much more sinister. These were structured, coordinated liquidations happening in blocks of exactly 100,000 shares. Someone with serious capital and serious coordination was methodically destroying the market cap of America's largest companies. And then we have to talk about the timing, because this didn't happen in a vacuum. 18 hours before the market opened, Beijing made an announcement that most people missed. They quietly updated their foreign investment guidelines. Buried in paragraph 47 of a 200-page document, they essentially gave Chinese institutions permission to reduce their exposure to, quote, volatile foreign assets, unquote. That wasn't legal boilerplate. That was a green light. That was Beijing telling their banks, their pension funds, their sovereign wealth vehicles to start pulling money out of American markets. But why now? Why today? To understand that, we have to look at what happened 72 hours ago that the mainstream media completely ignored. The Federal Reserve released their quarterly custodial holdings report. And hidden in that data was a number that should have triggered alarm bells across every trading floor in Manhattan. Chinese holdings of U.S. Treasuries dropped by $127 billion in the last quarter. That's not a reduction. That's a liquidation. That's a financial power moving their chess pieces into position for something much bigger. And here's where the story gets really dark, because this isn't just about money. This is about control. For decades, China has been America's largest foreign creditor. They held over $1 trillion in U.S. government debt. That gave them enormous leverage over American monetary policy. If they threatened to dump treasuries, the Fed had to listen. If they hinted at diversification, Washington had to pay attention. But something changed. Something made them decide that holding American debt was no longer in their strategic interest. The answer is Taiwan. 3 weeks ago, the U.S. announced the largest arms sale to Taiwan in history. $18 billion worth of advanced missile systems, radar technology, and fighter jets. Beijing's response was swift and public. They condemned the sale. They threatened retaliation. But their real response was happening in the financial markets. They were quietly, methodically, turning their economic weapons on the American financial system. Because here's what most people don't understand about modern warfare. You don't need tanks, you don't need missiles, you just need to crash the enemy's currency. You just need to trigger a liquidity crisis that forces their central bank to choose between saving their economy and saving their empire. And that's exactly what we saw today. The Chinese weren't just selling stocks. They were forcing the Federal Reserve into an impossible position. Think about it. The Fed has spent the last 2 years trying to fight inflation. They've raised rates. They've reduced their balance sheet. They've done everything they can to tighten financial conditions and bring down asset prices. But today, faced with a coordinated attack on American markets, what did they do? They blinked. At 2:47 p.m., the New York Fed announced a $25 billion repo operation. They started printing money again. They abandoned their fight against inflation to prevent a complete market collapse. Beijing just forced Jerome Powell to restart quantitative easing without firing a single shot. They proved that American monetary policy is no longer independent. It's reactive. It's defensive. And it's vulnerable to external pressure from a country that used to be a manufacturing partner, but is now clearly positioning itself as a financial adversary. But the repo operation was just the beginning, because what happened next reveals the true scope of this coordinated assault. At 3:15 p.m., trading volume in Treasury futures spiked to levels we haven't seen since March 2020. But this wasn't flight to safety buying. This was forced selling. Chinese institutions were dumping long-term government bonds and buying short-term bills. They were flattening the yield curve. They were making it impossible for American banks to make money on the spread between short and long-term rates. And then came the currency attack. Starting at 3:30 p.m., we saw massive selling pressure on the dollar against the yuan. Not gradual weakness, coordinated assault. Within 45 minutes, the dollar dropped 1.8% against the Chinese currency. That might not sound like much, but in currency markets, that's an earthquake. That's the kind of move that destroys carry trades and forces commodity repricing across global markets. But here's the most terrifying part. This was just the opening move, because what we witnessed today wasn't China dumping their American assets to hurt the U.S. economy. This was China stress testing their ability to crash American markets at will. This was a demonstration, a proof of concept, a warning shot that shows they now have the financial firepower to trigger a systemic crisis whenever they choose. And the numbers prove it. Chinese institutions still hold approximately $800 billion in American assets. If today's liquidation was just $30 billion and it crashed the Dow by 847 points, what happens when they dump $100 billion? What happens when they coordinate with Russia, with Iran, with every country that has a strategic interest in breaking American financial dominance? The Federal Reserve knows this. That's why they panicked. That's why they restarted money printing after just 6 months of quantitative tightening. They realized that their ability to control American monetary policy is now completely dependent on Chinese cooperation. If Beijing decides to liquidate their remaining treasury holdings, the Fed would have to print trillions just to prevent a complete collapse of the bond market. We are witnessing the end of the petrodollar system in real time. For 50 years, the global economy has been built on the assumption that everyone needs dollars to buy oil, to settle international trade, to store value. But what happens when the second largest economy in the world decides they don't want dollars anymore? What happens when they can crash American markets just by selling the assets they've been accumulating for decades? Today was their answer. Today was them showing the world that American financial markets are no longer too big to fail. They're too big to defend. Because the people who used to provide the liquidity, who used to buy the dips, who used to stabilize the system during times of stress, are now the ones creating the stress. The patient has become the virus. And this brings us to the geopolitical endgame that nobody wants to acknowledge. China isn't trying to collapse the American economy overnight. That would hurt them too. What they're doing is much more strategic. They're proving that they can weaponize American financial markets against American foreign policy. Every time Washington makes a move that Beijing doesn't like, they can crash the stock market. Every time the U.S. threatens sanctions, they can force the Fed to print money. They've turned America's greatest strength, the depth and liquidity of its financial markets, into a weakness, because those markets are now hostage to foreign capital flows that can be turned on and off like a faucet. Today's sell-off wasn't random volatility. It was a demonstration of financial sovereignty. It was Beijing showing Washington that economic warfare goes both ways. And the most dangerous part is that this is just the beginning. Because if China can coordinate this kind of market assault with just their government-controlled institutions, imagine what happens when they bring in the private sector, when they give Chinese corporations permission to divest from American markets, when they encourage their citizens to pull money out of American assets and bring it home. We could be looking at a systematic unwinding of 40 years of financial integration, a reverse globalization that destroys the foundation of American economic power, and the Federal Reserve would be powerless to stop it without destroying the dollar through hyperinflation. Today wasn't just a market sell-off. It was a preview of the new reality, a world where American monetary policy is subject to Chinese approval, where Wall Street prosperity depends on Beijing's geopolitical mood, where the U.S. economy can be held hostage by a country that was supposed to be a partner but has clearly chosen to become an adversary. And here's what makes this even more terrifying. This was executed with surgical precision during American trading hours when maximum damage could be inflicted on retail investors, when pension funds would be forced to watch their holdings evaporate, when 401k accounts would get decimated. This wasn't accidental timing. This was psychological warfare designed to shake American confidence in their own financial system. Look at the after-hours trading data. Even after the closing bell, the selling continued. European markets opened down 3%. Asian futures are bleeding red. This isn't contained to Wall Street anymore. This is global contagion spreading through every time zone, every exchange, every currency that has exposure to American financial assets. But the most disturbing pattern is what we're seeing in the corporate bond market. Investment grade corporate debt spreads widened by 47 basis points today. That's the kind of move that usually happens during a recession, not during what's supposed to be a healthy economic expansion. Chinese institutions weren't just selling equities and treasuries, they were dumping corporate bonds from American companies that have significant China exposure. Apple's bonds got hammered. Tesla's debt spreads exploded. Every company that depends on Chinese manufacturing or Chinese consumers saw their borrowing costs skyrocket. Beijing wasn't just attacking the stock market. They were systematically targeting the corporate financing mechanism that keeps American business operating. And then there's the derivative explosion that nobody wants to talk about. Credit default swaps on major American banks spiked 23% today. The market is pricing in significantly higher probability that JP Morgan, Bank of America, Wells Fargo might face serious solvency issues. Why? Because these banks hold massive amounts of Chinese-related assets, trade finance facilities for importers and exporters, currency hedging products that become worthless if the dollar-yuan relationship breaks down. We're looking at cascade failure, where Chinese financial warfare triggers American bank stress, forces more Fed intervention, weakens the dollar further, giving Beijing even more ammunition for their next assault. A feedback loop designed to accelerate American monetary debasement while strengthening Chinese financial independence. And the intelligence community knows what's happening. 3 hours after markets closed, unusual aircraft movements around Langley, emergency meetings at Treasury that went past midnight, secure communications between Washington and allies in London, Tokyo, Seoul. This wasn't treated as normal market event. This was treated as national security incident. Because that's exactly what it was. Economic warfare conducted through financial markets with military precision. And the most frightening part is this was just the test run. Beijing wanted to see how quickly they could crash American markets, force Fed intervention, inflict damage without triggering immediate retaliation. The answer is a lot. They crashed the Dow 847 points, forced $25 billion in emergency liquidity, and significantly weakened the dollar, all while maintaining plausible deniability. They can claim this was just normal portfolio rebalancing, just rational economic decision-making, just market forces at work. But we know better. We know this was a demonstration of financial power that puts every American asset at risk. Every stock, every bond, every currency position that depends on Chinese capital flows for stability. And the message was clear. American financial markets are no longer American. They're global. And global means vulnerable to foreign manipulation at any time, for any reason, without warning. The trap has been set. And today, it's snapped shut. The question now is whether Washington understands what just happened, or whether they'll keep pretending this was just another day of normal market volatility. Because if they don't wake up to this new reality, tomorrow's sell-off could be the beginning of a systematic dismantling of American financial supremacy that makes 2008 look like a warm-up. The era of American financial invulnerability just ended, and most people don't even realize it yet. I am John A.G. from Currency Archive. Remember to like, subscribe, and share.